Hi guys, this is an S&P 500 technical analysis update for 23rd of May 2020. So, looks as though we're still going to go higher here, part of this blow off top, this sort of once in a lifetime, once in a generation type of move, similar to this 1999 move. It's not often when these kind of blow off tops occur. What occurred here was just a little bit of a B-wave rally really. It wasn't really significant, but what's going on right now, everything is set up here. I've been told 800,000 new Robinhood accounts in the last couple of weeks or months. So everything's set up here for this market to completely go vertical, and 4,000 here on the S&P. And those who have been following me on this YouTube channel for a while, they know how to play a parabolic move by now, having seen Verge and Tesla and BYND and TLRY and Bitcoin. They know, first of all, not to buy the top. That's the first thing. They also know not to short a parabolic move, and also you just you don't sell your winners until we get anywhere near the top, and we're nowhere near the top yet. Now, one thing I wanted to mention, it looks as though the altcoins are moving. I mean, if all of that is a B wave on DigiByte, it looks as though we could bounce out of here and go significantly higher. I mean, your target there would be 352 sats. So those who are following me on the crypto side of things, like I said, I'll try and do updates on YouTube whenever I can, but there's no guarantee. The good thing about the group is we get regular updates. Now, if these altcoins are moving here, if these altcoins are part of this melt up, then we have got a full-blown melt up here across everything. And I mean everything. I mean, that could be the end of a 3-year bear market in the altcoin. So are the altcoins going to go to 0.076? Assuming Ethereum BTC is our marker for the altcoins. I mean, even XRP. I mean, if this is moving, if XRP is moving here, there were lower targets, then clearly we've got something. So great time to join the group for those who are interested. Now, take two, so leaders are going to lead. I'm quite disappointed with the earnings, very disappointed. In fact, most disappointment I've ever seen in terms of any earnings. So 1, 2, 3, 4, 5, quite disappointed. It's now forming. If it gets below here, that's just a huge shakeout really. So it becomes an opportunity cost. If the Nasdaq is melting up, you want to be in things that are actually moving. This was the overnight high, but I fear it will just do this, then do this for the next couple of weeks, maybe do a bit of this, and really it becomes an opportunity cost. The concern with Take Two has always been, as I've mentioned, it's basically a mirror image of Netflix. Now, Netflix hasn't gone down to 230. That's not the point. When a parabolic move goes up, rising tide is going to lift all boats sort of thing, but it's been going sideways as Apple has gone up. So something to think about there with Take Two, but I'm no longer bullish on that stock. And Apple, we've had these targets for a while, so we do believe in the group. We said, look, it's going to go to a $2 trillion market cap. We said that 7 weeks ago, and we're looking at 420, 495, maybe 641. Not too sure about 641 at this point. That would require extreme level of FOMO that we've never seen before ever. I mean, it could happen. Could happen. I mean, if the Nasdaq's going to go 14k, I mean, but for Apple to double from here, that is extreme FOMO. I mean, that would get you a market cap of well above 2 trillion. But anyway, we'll take it one step at a time. 420 first target, and 500 on Apple. It's possible. Anyway, going back to the S&P 500. So really, it's just about not overthinking it. This kind of move, people who make a lot of money in this move are those who know nothing because they have no idea what's going on and just buying calls out of the money calls randomly, or those who know a lot but are able to contextualize what is going on. Those who are sort of in the middle, like I told the group, probably the worst time to be learning how to trade and invest and analyze a chart in the middle of a melt up, because if you're sort of in this zone here, none of this is going to make any sense, and of course it doesn't make sense. But that's what happens in a wave 5. It's not meant to make any sense. Anyway, 1, 2, 3, 4, 5. That could be a 2, could be a 1, 2, and we're just going to bust up out of here. Or 1, 2, 3, 4, 5. Then you get a 2, or it was the count, as I've said before, 1, 2, 3, 4, 5, and it's a 2. The problem with getting too involved in the Elliot wave count is you're going to end up overthinking it. And like I said, either you know nothing or you know a lot. Anyone in the middle, like most people, 99% of people are in that sort of middle zone where they know something but not a lot. They're going to end up overthinking it. And the thing with these sort of moves, there's a reason they occur every 20 years, because people forget about what happened here. Everyone's looking at this, but this is basically nothing to do with actually what's going on here. It's nothing to do with this or this. I don't even think this is going to happen when it tops. I think it'll be more of a 20-year bear market in some way, shape or form, either in terms of time or in terms of price. Basically just following what Japan did back in the 90s. But if you look here, this is what we're going to do. So these kind of moves, they don't occur often. I mean, you could argue we had a move like that back into 87, and we definitely had a move like that back into the stagflation era of the 1970s. I mean, prior to all of this, it had been going up since 1940. So, you know, once every 20, 30, 40 years, we get these sort of blow-off tops, which are major impulsive waves, and then that basically brings to an end, you know, the entire, well, I mean, then it just comes down to what level are you correcting? You know, then it comes down to what level are you correcting here? You know, is this a super cycle? Is it a grand super cycle? Because to me, this is a grand super cycle count. That this is the 1, 2, 3, 4. This is all 5, and this is all on the grand super cycle. Well, these are all super cycles. So this is super cycle 5 basically. So it's a 1, 2, 3, 4, 5. This is cycle 5 of super cycle 5, and this is all one complete 90-year grand super cycle. So if you say the sub-millennium count, which is the count even higher than this, started from 1792, you could argue all of this is the even larger count, the sub. Let me get my, yeah, that would be the grand super cycle count. That would be the even larger count from 1792, assuming this in itself is not wave 4 for grand super cycle, in which case I have to go to a sub-millennium count. But let's assume it's not. Let's assume it's a grand super cycle. So this is why after this peaks, it's clearly going to be a large correction in terms of price or time, and usually we will go to wave 4 of the next degree. So potentially here, I suppose. So maybe we just end up doing a fractal of this, just go sideways for the next 10, 20 years or something, and then that completes wave 4 grand super cycle, right? That would be wave 4 grand super, sorry, 1 second. Yeah, grand super cycle. So that would be the grand super cycle count. So this entire 90-year super cycle correction is now over basically. And then, I suppose, theoretically anyway, we then start a new 100-year bull market, or, you know, whatever, to complete a sub-millennium count. Of course, the alternate to that is, well, there's only one alternate, which is the fact that somehow this Great Depression was actually already a 4, and this is actually a wave 5 of the grand super cycle, in which case we are now forming, this is all one sub-millennium wave. So those are my two counts in terms of the long-term counts. It just comes down to which one you're in. But either way, you know, it's going to be a significant correction either way. If all that is a 1, well, then it's different, I suppose. That would be a sub-millennium. So it just comes down to whether we're going to complete either, you know, a 250-year bull market, i.e. one complete grand super cycle, or whether we're going to complete a grand super cycle on the lower degree, in which case it won't be as significant as it would have been for the option that I've just mentioned. But either way, however way you look at it, they've got the excuse that they needed. I mean, that was the main thing. You know, it's going to be a significant correction, but this is how markets move. We have bull cycles and we have bear cycles. Some are more significant, like this went sideways for 10 years. And this is just how markets move. There's nothing, you know, abnormal about this. It's just how markets move, you know. This went, well, sorry, that was the wrong fractal there. This fractal went sideways. And even that, I mean, technically the stock market went sideways for 7 years between 2000 and 2009. So these kind of sideways ranging sort of patterns, they do occur, and it's nothing out of the ordinary. All you have to do is just look left. So that would be the long-term count, and then it just comes down to whatever you're correcting. But as an absolute minimum, we are going to correct the 5 waves from here. But like I said, I've been calling for this to be, you know, a super cycle, grand super cycle correction for quite some time. But prior to any of that, things have to go vertical. So really, is there anything else to update here other than the long-term count? And then just the one other thing to mention that I'll mention here is the way these markets peak, so usually you get a negative skew, negative, and you get a positive skew. So you get something like this. Basically, these are puts, these are calls. So if you go, obviously I'm not drawing that accurately, it's something like this. So if you were to go, let's say 5 strikes wide in the SPY, left and right, down the put chain and up the call chain, basically puts trade richer than calls. And the reason for that is fairly obvious. People are generally hedged or generally positioned long in the market, and to hedge against that position, they buy puts to the downside, and they short calls against that long-term position. That creates a negative skew. So puts trade richer than calls. Mathematically, this is in fact a positive skew. That's not the point. As the market tends to go higher, this then all shifts to the left, where this then converts into a positive skew, where people now are getting so FOMO into the call side, they increase the premiums of the calls and they completely forget about downside risk. This is already going on. None of this was going on here. So I knew this was not the top. This is like one of 20 signs that I look for. Right now, it's starting to go on. Because the FOMO has now reached about 3.5, 4 out of 10. We're expecting this to go to the left. So that's just something to watch. Watch out for those call options, because everyone wants to be on the long side. Everyone's going to forget about put side. And really, when markets reach their terminal peak, you get this very strange situation where it's gone from the normality being negative to a positive skew. And this only occurs once every 20 or 30 years. So it's very rare for you to see this. For you to see such positive skew in terms of calls trading richer than puts if you were to go the same strikes wide. Right now, they're about equal. Okay, 6-7 weeks ago, it was all about P over C. Right now, it's almost P equals C. But as each month goes by, this chart is going to move to the right. So that's something to watch out there for positive and negative skew. Anyway, I'm going to wrap it up there. If you want to join the group, if you're interested in the altcoins or stock takes, I mean, one which we're looking at is going to be Lyft. We're looking at this to go to 47. So got to watch out for that. The only thing that they might do is do a false break, form an ABC, then do this. But either way, looks as though it wants to go to 47. That's just something to watch. Anyway, I'll wrap it up there. If you want to join the group, you know what to do. I'll catch you guys soon.